Finding the next big winner isn't easy. My next guest says it starts with identifying the right long-term theme. Today she's sharing when she's watching and the stocks she thinks are best positioned to benefit. Jessica Inskip is Director of Investor Research at stockbrokers.com and joins me here at the desk. Jessica, great to have you back.
Happy to be here.
All right, so you call this theme interconnectivity. What is it? Why now?
Well, so I'm thinking about the largest gap within the emerging trends that I'm seeing within the market. The last time that we did this was the artificial intelligence boom. That was the emerging trend, and then the gap was bringing that to life. What were the picks and shovels that created those LLMs? What are the enterprise solutions? How would that transform? So the next emerging theme that I'm seeing is actually these new type of assets as the market is evolving, which started with crypto. We have blockchain. Now we have tokenized assets. We have the onset of prediction markets and those event contracts. And there's a lot of regulation that I can see that the SEC is looking at. FINRA is asking for commentary from brokerage firms, where essentially these are all different trading venues that don't talk to each other. And so that's the big bottleneck. So right now in traditional markets, we have something through Reg NMS, SIP, which is a consolidated tape. A retail investor might see this as, we call it the top quote. You have the bid and ask whenever you're looking to buy a stock or an equity. The ask is the best price available for you to buy. The bid is the best price available for you to sell. That best price is from a ton of different venues. It is the New York Stock Exchange. It's all of the exchanges. It's market makers. It's the interconnectivity that is through this consolidated tape that they can access to see the best price to buy, the best price to sell. That does not exist for these new type of assets. If you have an event contract, if you're at Polymarket, you can have the same event contract. It does not talk to that identical event contract at Kalshi, for example. And it's a bigger issue when we're looking at tokenized securities because this is Apple. And you don't have actually the best price available to Apple. You have the best price available at the trading venue that you chose, which is a historic issue that we've had some problem solving and innovations on as our modern markets have evolved. I know this is so deep into the weeds.
Sure. So yeah, I guess let's break it down a bit more simple.
Sure.
If someone buys into this theme, what are they actually betting on?
They are betting on the infrastructure layout for someone to connect these together. It's for there to be a consolidated tape for whoever is building the picks and shovels for this new emerging market in order to have an efficient market system.
Okay, so let's get into the top picks, your
Sure.
top interconnectivity picks.
Yes.
The first pick is Coinbase, a big loser year to date, but why are you betting on Coinbase?
So Coinbase very specifically is the tokenized stocks component of that. And I also want to put this with Circle as well. I like to put those together because of stablecoins. Now, we think about settlement, prediction markets, event contracts, all settle in stablecoins. Did you know that? And so it's a very important component with USDC, the stablecoins for Coinbase and Circle specifically. I group those together. So that's important for the interconnectivity because it's the settlement aspect. Right now, stocks settle in cash. They have a one business day. It goes into your money market. There's a bunch of guardrails and infrastructure that occurs with that. Coinbase and Circle are the forefront of the settlement aspect of tokenized securities.
Okay, so your first pick is actually two picks.
It is
Coinbase
2 picks. I put them
and
together.
Circle.
Yes.
Next up, Robinhood actually has been recovering. It did have a tough first half of the year. It's been recovering. I think it's near the flat line last I checked. Why Robinhood?
So Robinhood is the forefront of this push to tokenized securities. So if we want to put these in layers, the Circle and Coinbase is going to be the settlement aspect of actually bringing those to life. They're a component of that, but Robinhood is bringing those to retail investors. We can see that with their earnings. You can see that with their conference calls. You can see that with their client events and their brokerage events. They just did one overseas, and the big push was tokenized securities. And that has to do with intermarket connectivity to overseas because to put this in perspective, on the retail world, we're seeing this influx of 24/7 and 25 trading. That doesn't mean that there's retail traders in the middle of the night wanting to trade. It's actually market access for our friends over in APAC and more global market access, so they can trade securities on their time. In order for that to happen, that requires liquidity. And the provider one of the main providers that is doing that from a tokenized perspective is Robinhood. And so that's why it's my top pick from this theme specifically. But I do also like them essentially because of their retail trading boom. They are a huge component of that, but they also are very volatile. They follow Bitcoin a lot. If Bitcoin's falling down, that tends to hurt their revenue. So I think that's something to be cognizant of. But they have a retail app that spans all three of those markets that I were talking about for that interconnectivity bottleneck. So that's why it's my exposure for a brokerage firm specifically.
But going back to Bitcoin for just a second,
Yeah.
Bitcoin has been disappointing quite a bit this year. So can this theme or these picks, Robinhood, Coinbase, same thing, succeed if Bitcoin doesn't outperform or if it continues to struggle?
I do think it can. So with Robinhood specifically, that drives a lot of their trading revenue. So if there is less there, but it's outweighed by something else as they add more diverse revenue streams. So top of mind, we've had Bank of America reporting. They talked about their resilience because of their diverse revenue streams. Robinhood is building that out. This is another measure of that diverse revenue stream. So I do think they could overcome it, but it is a risk. So I do want to flag that. Interestingly enough, with Coinbase and Circle, I believe it was Coinbase specifically, last year when Bitcoin was falling down, they still exceeded earnings, and it had to do with stablecoins because of the settlement that was happening within prediction markets. So that's already proving out with those. I just think the market's forgotten that. But all three of these thus far are high beta, volatile names, high risk, high reward. So it's important to consider these are risky investments, but with higher risk comes higher reward potential.
Okay,
Yeah.
and we'll come back to that, but let's get to your next pick. Intercontinental Exchange, ICE, the parent company of the NYSE. Why is that one in there?
Yes. So they have tokenization plans. They have decided to be on the forefront of that. And from an exchange perspective, I think that's great because it's going to provide that interconnectivity. I'm not sure how they're going to get tokenized Apple to talk to traditional equity Apple unless we move completely into tokenized securities, which will be interesting from a transfer agent perspective. And it's not my job to fill that gap, but I want to understand who is filling that gap and where the opportunities are. And that's where I see ICE. Plus, they have a $2 billion stake in Polymarket as well. So there is exposure to event contracts. So I want to look at those themes, and if they are a component that provides interconnectivity today to our capital markets from the equities perspective and others, I believe that they want to make sure that they are in the forefront of that because they recognize it's an opportunity with these tokenized securities.
Okay, next on your list actually has NYSE or ICE connections, and that's bullish because it's led by Tom Farley, who used to run the NYSE. It's not necessarily a household name yet. Why should investors know this one? Why should they buy this one?
So if we're looking for complete exposure from the public companies that are available, this is the one with the most exposure to this bottleneck specifically. So it's also the riskiest, and it's been in a free fall lately. I think that's important for listeners to know. They had this Equiniti deal. I'm probably pronouncing that incorrectly because I read a lot more than I listen, but they are the first regulated tokenized securities trading approval that was happened in June 29th, very, very recently. That means that they are a huge component of actually building the interconnectivity and bringing everyone together. So it makes sense why ICE is related and working with them. So if you want the actual exposure to how is a consolidated tape going to exist, it is bullish.
Okay, so the most speculative of the names, you would say?
The most speculative, but with the most opportunity potential. But that also means you could lose the most. And it's a longer term view. It's going to take some time for this to even play out. Remember, with the AI theme, even if I was talking about ChatGPT very early on, there was still a sell-off, and they sell off in sympathy, especially when things are misunderstood. Market mechanics also come into play. So I think that's just important to know and be cognizant of.
Okay, finally, MasterCard, probably the most established company on the list, or one of the most. ICE would probably not want me to say that. Why does it fit alongside the others?
So this is adjacent to the gap that I'm seeing. So we've talked a lot about interconnectivity of assets, settlement of said assets, and how they can talk to each other. We're in the year of agentic AI. I have lovely AI agents that go and track the market for me, and I am obsessed with it, and it has increased my productivity so very much. There are others that are more advanced than me that have AI agents that physically go spend money for them. That requires stablecoin, so there's another bull case back. But MasterCard is the first payments incubate on agentic rails. So if you are going on the computer and you hit a website that you can't access, you'll get error code 404, or doesn't exist. There's something called error code 402, or embracing protocol 402. That's for agents specifically in order to process payment. So they're the first, at least AI agent payment rails that I'm seeing within the financial space that's established that is embracing that. And of course, I think that's going to be the way future as we have enhanced productivity, as these agents mature, a fun thing to say, and start needing to pay for themselves on their ventures that their users or enterprise are even accessing. So I think that's immaterial to earnings today.
Okay, and we've mentioned a few times that these are higher risk picks. So who is this theme actually, who should not be investing in these stocks?
That is such a great question, and I appreciate you asking that. It's a time component. The one asset I wish I could get my hands on is more time. And that's something that's finite that we're eventually going to run out of. If you're further on in your trading journey and you're in a wealth preservation, these are high risk names. Yes, they have opportunity, but if you need to preserve your nest egg, this is not the time for you. If you have a 5 to 10 year investing horizon, it absolutely is. It's longer term. I think it will play out quicker than that. However, I think it's important to know it's just your risk tolerance. If you have the ability to be a little more riskier, this is higher on the risk pyramid.
What milestones are you watching that will tell you that this is actually playing out and working?
Well, it's one, earnings calls is going to be the first one, giving insight into commentary of the exposure of this and any additional bottlenecks that are appearing. So it's going to tell me that it's working because the focus is still there. If the focus is still there for earnings and we want to keep consistently telling shareholders about it, then that means it's playing out. Additionally, we want to see it show up literally in earnings, but that takes some time, especially with companies that have negative earnings. So we're just looking for profit margins to start expanding, expenses to start slowing down, earnings starting to be less negative, moving more towards that positive line. So that's going to give me indication that it is working. And then as soon as we start seeing additional news headlines on it, someone starts talking about it more, just almost...
But what would that headline be?
It's hard to say. I wish I could predict that very specifically. The headline is going to be, all of a sudden, we can access tokenized securities on this exchange. That to me would be very, very big. That means it's playing out, as in these are coming to life. If these are coming to life, like an LLM is coming to life, it's amazing to me that I'm using that as an analogy right now. But as large language models came to life, that proved the bull case for semiconductors. This is very similar as tokenization will come to life. This is the bull case for the interconnectivity that requires that to come to life.
Okay, and you brought in Circle, so I just want to give you a chance. We like to pack in as many picks as possible. Are there other names that fit into this theme that we didn't get to? And are there any that you would avoid that also fit into this theme?
There are others. So I gave you my top picks kind of tiered. There's some more speculative that I have. There's Net, that is very similar to MasterCard with the agent request and payment guardrails, BTGO with custody, and then there's institutional proxies. So these are actually, I want to say, less speculative, but they're going to offer some type of exposure because of the way that banks react. So for example, banks have come together and started creating their own stablecoins because they understand that this is a process that's moving forward, and they diverse their revenue streams. A great example of that, if we think about when Venmo came on, the banks came together and they created Zelle. And that was a threat to their business. If there was a threat to their business, they've learned that they have to embrace it and create their own, and they can because they can scale it. So it doesn't put down the other one, but it does amplify theirs as well. So you can get exposure from JP Morgan, you can from BlackRock, and you can even from Bank of America, smaller exposure there, but they have tokenized funds. JP Morgan has been working on chain settlement proofs and things of that nature. So that helps validate those rails.
Okay, all right. So you gave some of the big names, and then you also mentioned Net, which is Cloudflare, and then BTGO, which is BitGo, but
Yes.
more speculative there,
Yes.
so the more risk. Okay, I think it's a great time to pivot to our rapid fire round. So this
All
will
right.
be quick questions and very quick answers. You've played before. You know the rules. You
I'm
ready?
excited, yes.
Okay, if you could only own one of these stocks for the next 5 years, which is it?
I have a high risk tolerance, but I would go with bullish.
Which name would you cut from the list first?
Oh, that's so tough. I do so much research here. It'd be those speculative ones, Net and BTGO.
What's the first stock you'd buy on a pullback?
Apple. Not on from this
no,
list.
Okay.
Okay.
First stock on this list that you'd buy on a pullback.
Circle.
What stock on the list doubles first?
It would be bullish, but it also would double losses first.
Most resilient name if the economy slows?
JP Morgan.
Which on the list has the biggest competitive advantage over its rivals?
Robinhood only on this one specific component. Otherwise, its rivals have other competitive advantages.
And the biggest risk to your picks?
Regulatory. Regulatory risk. A lot of this hangs on the Clarity Act, portions of that going through. So if something comes in where FINRA wants to put a stop to it, the SEC wants to put a stop to it or slows it down, that's the biggest risk.
Okay, we'll leave it there. Jess, I always appreciate you joining us. Appreciate those picks as well. Thanks so much.
My pleasure. Thank you.
That's Jessica Inskip, Director of Investor Research at stockbrokers.com. If you enjoyed this stock pick video, check out our full interview with Dan White, where he breaks down the top 5 stocks he's rotating into for the next leg higher.